Hello everyone, how's everyone doing? Hope everyone has had a good Monday. Today we're going to be reviewing May 19, 2025. This was a no news Monday, and I personally did not take place in any trades on this day. It's just a part of my rule set to avoid days where I anticipate low volatility. Now, today was not necessarily low volatility, as generally everyone has seen. Today was a expansion day, and we had London low set a low of day, and then during the morning and lunch and afternoon, we continued to trade higher. So as always, information should not be considered as an offer or enticement to buy, sell, or trade. Okay, so here we have the daily chart that we're all so familiar with. As you can see, the the latest candle is the Monday, May 19th candle, and as you can see, it opened lower, it capped lower with Sunday's open, ran lower, back inside of this gap, traded back higher, running the Thursday low. High. Notice how we also use this array that we have dragged out here, again, using as support. Now, before we move into the actual daily move, I just thought it would be important to talk about how Sunday opened and how we got lower. Since I mentioned this on the review of last Friday, previous week Friday, May 16th review, we said that it would be important to heavily consider what Sunday opening really does in order to shape a new bias going into the week, and what Sunday open is going to do, and probably further into Monday, it would provide us with the data that we need and with the kind of footprints of price action that would point us in the direction of we know what price is likely to do further on or further in time. So you can see I have here the new week opening gap of 518, which is Sunday, May 18th. You can see we closed at this candle and the gap lower, giving us a new week opening gap. You can see as we first opened up, we filled this new week opening gap and then we dropped lower. Now, the way that we gapped down, we opened beneath this low here, and before we did this move higher, you can see that we actually did a wick beneath this low. Then after we touched the higher end of the new opening gap inside of this fair value gap, also this liquidity void right here, and if you check it out one time, you can see it was actually used with this wick lower here. You can see that we also reached to this low here, which we'll get into more. Firstly, by showing you my Notion notes that I actually took when going into the day. Now, again, I did not trade, but I did take screenshots of points that I thought were going to be important as we moved into the day. Okay, so here's a screenshot from my Notion journal. As you can see, this is at 11:28 May 19, UTC -4, which is Eastern time. And this is live, as you can see. We have buy-side liquidity journals, and we have you run on this low labeled as a buy program initiation. Now, I've recently spoken about this concept of initiating a buy program where price is going to deliver with displacement quickly when the time is right, obviously. And this is the scenario that happened here. Obviously, we're bullish. We want to see price continue to move higher using discount to raise support and rushing through premium earnings. Now, what we have here with Sunday's open is we gap down and created this wick lower that ran this low that we had previously highlighted on this slide, which is this low here. We see that once price runs that low, obviously we spend time beneath this low, and what this does is accumulate sell orders. Now, since we have the idea that we want to move higher, we obviously anticipate this run on this low to be a fake breakout and to be a turtle soup, which would initiate a buy program, which would cause us to deliver towards buy side liquidity efficiently and quickly. Now, another thing that comes with this is that once we run this low, we form a kind of pattern of a breaker where we have a low high, which is the buy side liquidity that I have drawn out here. Then we have the lower low, and then we try to shape in the higher high, which would give us the breaker and form this move that happened lower to be used as an order block. And hopefully within tomorrow, once we're over this entire range, we can start to have the idea that price will use the range of this low here, I'm sorry, this high here to this low here as a order block to support price higher. Now, what comes with this is that we're going to be kind of left to hope that an array will hold, and which is obviously the order block that was formed with this. So, moving into the 15-minute time frame, I don't think it's going to be worth it to move into the micro time frames like the 1 minute, even the 5 minute, because I feel like everything can be explained here on the 15 minutes. So this candle here is 9:30 open, and as you can see, all the price action before 9:30 open is just slow price action, and as I mentioned previously, obviously the time needs to be right for the buy program initiation to occur. So you can see all of this price actions sideways movement was time distortion in order for price to accumulate orders beneath the sell side liquidity and inducing more early sellers and faking buyers to obviously exit their positions, running beneath this low, obviously this low, because lows have buy stops. We see that after that happens, 9:30 and the rest of the day quite quickly rushes through the range and engulfs that range. And as you can see with this kind of close here, rush back lower, and then we kind of just accumulate until we close off on the day. Thank you all for watching. This was a very short video. It just was a couple of notes just to go over what happened during the day. Obviously, I didn't trade, and honestly, I don't recommend anyone to trade on days where we have no news, especially when it's Mondays. And yeah, as always, Lord willing, be safe.